Hey, future investing legends. Ever feel like the world of finance is speaking a different language? Like there's some secret club you haven't gotten a membership card for yet? You see headlines about the stock market, cryptocurrency, and all sorts of fancy terms, and maybe you've even thought, hey, I should probably get in on this, but then, paralysis. Where do you even start? That's a question a lot of young people are asking themselves right now. You're probably juggling student loans, rent, maybe that dream vacation fund, and the idea of adding investor to your already packed resume might seem daunting, even expensive. But what if I told you there are tools out there designed specifically for you? Tools that break down those intimidating barriers and make investing accessible, even with just a few dollars to spare. Today, we're diving deep into two of the most popular platforms making waves in the world of microinvesting and beyond, Acorns and SoFi. You've probably seen their ads, maybe even heard your friends talking about them. They both promise to help you grow your money, but they approach it in slightly different ways. So, the big question we're tackling today is, for a young investor just starting out, which one reigns supreme? Acorns or SoFi? To answer that, we need to look under the hood, compare their features, understand their strengths and weaknesses, and ultimately figure out which one aligns best with your financial goals and your current stage in life. We'll be covering everything from their core investment strategies and account types to their fees, educational resources, and the overall user experience. Let's start with Acorns. What exactly is it, and what makes it so appealing to beginners? At its heart, Acorns is built on the concept of roundups. Imagine you buy a coffee for $3.75. With Acorns, you can link your debit or credit cards, and it will automatically round up that purchase to the nearest dollar, in this case, $4. That spare 25 cents then gets swept into your Acorns investment account once it accumulates to at least $5. This set-it-and-forget-it approach is incredibly powerful for those who find it hard to actively save. It's like saving on autopilot, without even really noticing it. But Acorns is more than just roundups. Once you have that money in your account, where does it go? Acorns invests your funds in a portfolio of exchange-traded funds, ETFs. These ETFs are diversified baskets of stocks and bonds, designed to match different risk tolerances. When you sign up, Acorns asks you a few questions about your financial situation, your investment goals, and your comfort level with risk. Based on your answers, they recommend one of 5 core portfolios, ranging from conservative, mostly bonds, to aggressive, mostly stocks. This pre-built portfolio approach takes the guesswork out of choosing individual investments, which can be a huge relief for beginners. Beyond the core investment account, Acorns has expanded its offerings over time. They now provide Acorns Spend. This is a checking account that integrates seamlessly with the investment platform, allowing for those roundups to happen effortlessly. It often comes with a debit card and can offer features like direct deposit. Acorns Later. This is their retirement account option, offering traditional, Roth, and SEP IRA accounts. This allows you to start saving for your future in a tax-advantaged way, which is crucial for young investors with a long time horizon. Acorns Early. This allows you to open investment accounts for your children or loved ones under the age of 18, fostering financial literacy from a young age. Now, let's talk about SoFi. While it also caters to young investors, its approach is a bit broader. SoFi, which originally stood for Social Finance, started as a student loan refinancing company and has since evolved into a comprehensive personal finance platform. Their investment offerings are just one piece of a larger puzzle that includes banking, lending, and financial planning. When it comes to investing, SoFi offers a few different avenues. SoFi Invest. This platform allows you to invest in stocks, ETFs, and even cryptocurrency. Unlike Acorns' pre-built portfolios, SoFi gives you more control over your investment choices. You can buy individual stocks with as little as $5, trade ETFs, and even dabble in the world of digital currencies, though it's important to note the higher risks associated with crypto. SoFi Automated Investing. For those who prefer a more hands-off approach similar to Acorns, SoFi also offers automated investing. You answer questions about your goals and risk tolerance, and SoFi builds a diversified portfolio of ETFs for you, automatically rebalancing it over time. This is a direct competitor to Acorns' core offering. SoFi Active Investing. This caters to more experienced investors who want to actively manage their own portfolios, offering commission-free trading of stocks and ETFs. Beyond investing, SoFi also provides SoFi Checking and Savings. These accounts often come with competitive interest rates and no monthly fees, offering a convenient place to manage your everyday finances. SoFi Loans. As their original business, SoFi continues to offer student loan refinancing, as well as personal loans and home loans. SoFi Learn. This is a valuable resource offering financial education articles, calculators, and webinars, helping users improve their financial literacy. Access to financial planners. SoFi offers complimentary access to financial planners, which can be a significant benefit, especially for young investors navigating complex financial decisions for the first time. So, we have Acorns, the king of roundups and simplified, automated investing, and SoFi, the broader platform offering more investment choices alongside banking and lending services. Now, let's get down to the nitty-gritty and compare them across key factors relevant to young investors. Fees. This is a crucial consideration for anyone starting out. Acorns has a tiered subscription model. Their basic personal plan, which includes the investment account, checking account, and debit card, typically costs a few dollars per month. They also have higher tier plans with additional features like retirement accounts and family investment accounts, which come with a higher monthly fee. It's important to note that these flat monthly fees can eat into smaller balances more significantly than a percentage-based fee. SoFi, on the other hand, generally offers commission-free trading for stocks and ETFs and charges no management fees for their automated investing platform. This can be a significant advantage, especially as your portfolio grows. Their banking services also typically come with no monthly fees. Investment options. Acorns keeps it simple with its pre-built ETF portfolios based on your risk tolerance. This simplicity is great for beginners who might feel overwhelmed by choosing individual investments. SoFi offers a wider range of options, including individual stocks, ETFs, and even crypto. While this provides more flexibility, it also requires more knowledge and research on the investor's part. For a complete novice, the sheer number of choices on SoFi might feel intimidating. With that said, thanks for watching and until next time.